Welcome, everybody. Pretty excited about today's session here. I'm seeing already people's already chiming in on the comments. Welcome, everybody. For those that are brand new to Savvy Investor, I want to welcome you guys all to Savvy Investor and to our YouTube channel. And for those that don't necessarily know who I am, my name is Mike Ponte, and I'm the founder of Savvy Investor and also a very long time Canadian real estate investor as well. I'm not sure about you guys. For myself, very excited about today's discussion. I'm not sure about all of you guys. Anybody else looking for money right now for as a need for some of your real estate investments? I know for myself, always looking for money, always looking for money to help support my projects as well. And so for today's session, it's all about private lending. Who's interested about private lending? Wave your hands. Let us know that you're here. I know for a lot of people, a lot of individuals are very interested in the private lending sector. And for many of us, it's actually to fund some of our real estate investment deals. They're just like, well, how is this all going to work? How can I actually fund this? And how can I use private money to actually get into some of these purchases? So we'll be talking a little bit about that. And then we have others that are like, you know what, I've got all this capital and I'm looking to get into the private lending game as well. But I would really like to know what some of the pros and cons are in this investment strategy and get a better sense of this. So today we're going to be talking about lots of different questions, and I'm sure there's many of them right now. Don't be afraid to post them in the comments because this is all for you guys. And some of the questions that may come up is, you know what are some of the rates that we are seeing? What are some of the terms when it comes to private lending? And how does this even make sense? Some of these interest rates are really high. How does this even make sense to fund these real estate deals? How are people doing this? And then again, for others looking to get into the private lending sector, and there's like, I've got this capital, I want to do this, but I'm a little nervous. I'm scared. I don't necessarily know what I'm doing, and how do I mitigate some of that risk? All fair questions. I am going to do my part to try to get those questions answered to the best of my ability. But I thought it would be even better is bringing somebody else that has got a lot of experience when it comes to private lending. And so I brought in Marinella Nicolosi to kind of join us because she is an actual avid private lender. She's actually a teacher on this subject as well. And I'm like, you know what? Let's bring her in to help us savvy investors get some more clarity to this topic. And so I'm extremely excited having her on. And I know you'll learn a lot from this as well. So before we kind of get things started, just as a reminder, guys, this is a YouTube live. I can see your comments. I already see you guys already sharing comments and letting us know you're here. So thank you for that. So make sure you get those keyboards humming to the best of your abilities. Ask those questions. I can post them up, share, and even more importantly, is get those questions answered. Even for those that are actually watching the recording, please just post them. We'll make sure we respond accordingly. To help you get your fingers warmed up, if you haven't had the opportunity already, please do us a little bit of a favor. Please subscribe to our Savvy Investor channel. Give us a like to this video, and even more importantly, hit that notification button or notification bell as well. It helps with all those algorithms and helps support the growth of our channel. This is kind of one of my goals for this coming year, is to really grow our YouTube channel. So let's get to the topic at hand. And more importantly, let's welcome our wonderful guest speaker, Marinella, to the show. So let me just bring her on. There she is. Welcome, Marinella. How are you doing?
Good. Thank you for having me.
Great. So, Marinella, thanks again. You've been, we've talked quite a bit actually before we jumped on here about this particular topic, and we knew that there was a lot of interest of individuals jumping on. But, you've done a lot of webinars, you've done a lot of these different things, a lot of postings specifically when it comes to private lending. But there might be a lot of us that actually don't necessarily know who you are. So if you don't mind, maybe just to begin with, tell us who you are, what you're all about, and how did you get started in this crazy world called private lending?
Yeah, so I started professionally about 3 years ago when I joined the Kispire community. However, I started with private lending about 3 years ago, but with real estate, when I came to Canada, this is about 26 years ago, and I got married, we did a lot of flips with my ex-husband. And that's how I actually was doing some, buying primarily residence and then flipping it, do renovations. And we made quite a bit of money actually like that. But then, life goes on. And then, I now I'm on my own. And about 3 years ago, I actually got some money, like from inheritance money, and also had I wanted to change my lifestyle, and I wanted to have a little more freedom. So when I actually saw the Kispire opportunity and to join them and learn more about the real estate investing, I literally jumped in, and it took me a good 9 months before I even knew which kind of strategy I wanted to try. And then finally I decided to do private lending, and I jumped right in. I educated myself. And now I've gained quite a lot of experience, and I feel that I want to give back to the community, because there is a lot of people who wants to do private lending, but they don't know how. And the other thing is that I had, throughout my life, I've gained a lot of skills, which range from business skills and administration, and communication skills through my work also as an educator. I've built all those skills, which also helped me with private lending. And so I felt that I wanted to communicate to people that it's building your professional and also personal skills will help you also to promote yourself as a private lender, find deals. And so I felt that it's important to communicate that to people, because it isn't just about learning private lending. To me, it's more kind of, you have to have a little bit of a holistic approach to it if you
Right.
want to be really good at private lending. So I feel like that now, as I gain that knowledge, I just want to pass it on. And yeah.
Awesome. Love it. Like, I think there's so many different strategies that are out there, right? And I think for a lot of people, they're investors in real estate, multifamily investing. There's lots of ways to do this and to make a good return on your investment. And you've approached it as more in the private lending side. Maybe can you share with us maybe just some of your experience that you've had in the private lending side? Like what have you been funding? What are the type of typical projects you would normally look at, and the reason kind of why you chose maybe private lending versus any of these other different types of strategies that many of us have actually learned, right?
Yeah, so private lending, you can diversify yourself within the private lending strategy. So this is what I've been trying to do, is diversify my portfolio, because you want to minimize your risks when you don't want to put all your eggs in one basket. So I determined what my budget was, basically what are the funds that I could invest, and then I decided, I establish those lending criteria, which I follow really strictly. And of course, I'm still flexible, but I try to maintain, my investments within that risk tolerance and my lending criteria, right? And so what I did, I invest in from bridge loans to land development. I fund burst project. I fund flips. However, I do not. I'm not into JVs partnerships, for example,
Mm,
because I'm not interested in equity, at all, basically.
mm,
So I just like to fund a project, give my money to the borrower, and then get my, returns. And then the borrower will just give me my money back at the end. So I don't really want to have any stake on the project. I just want to, you know, make my returns, and that's it. However, it can be great also for those ones who want to have an equity stake in a project. That can be also really good, but it's really a personal choice.
mhm.
And so private lending, you can do many different strategies with it. You can do mix. You can do private equity and invest in REITs. You can invest your cash. You can invest registered funds. So there is different ways of doing it, and there's a lot of strategies that you, as a private lender, you can support and help borrowers who need the money to fund their projects.
Yeah, perfect. It's great. Like, I think those are some great insights in regards to, what you've done, what the types of format that you have in a strategy. And we'll talk much more in depth with that as well. But there's a question here, and it's wonderful to see Barb. Nice to see you, Barb. I'm seeing you here. But do you fund individuals, builders, or you work with a mortgage broker? I guess it's a combination. I guess the real question, and I think we'll touch more on this a little bit more at closer to the end of the questions, but we can jump into this right now. When you are looking for funding a private deal, what is some of your preference? And do you fund individuals directly, and I guess part of the relationships, and maybe we'll talk about relationships later on, or do you work mostly with maybe a mortgage broker?
I actually do both. There are mortgage brokers that I really trust, because what I found is that I've talked to many different brokers, and all of them have the same vetting criteria and vetting standards. So I found a couple of them which I'm really comfortable with and I really like to work with.
Right.
But I also work, once I've learned how to do the due diligence process, because that's kind of that's a key. That's key to be successful. And so once I learned how to do that, then I work with corporations. I lend money to corporations. I lend money to individuals. However, they have to fall within the criteria that I've set for myself. And so that is really important, that when you do want to do private lending, when you want to invest, it's creating the criteria for yourself, so that you do not, you can still be flexible. However, you get those guidelines that tell you exactly where you want to be and who you want to work with.
Right.
And so that you can then, find the right people for, that will help you, build up your portfolio and all of that.
Yeah, that's great. And I got Barb's got a second part to this question. And like I said, I know we're going to dig into this, and like we could be here all night, guys, just so you know, in regards to asking questions, but we'll try to do the best that we can to get most of them in. But I guess maybe from your experiences working with individuals or builders or mortgage broker, is there one that's safer than another in regards to, if I was myself, so for here I am trying to get into this space, Marinella, and you've obviously got experience in this, and I'm like, okay, well, where would be some of my safest bets just to begin with, as for myself to lend? Is it individuals, builders, working with the mortgage broker? Do you have some insight to that?
Yeah, absolutely. So if you are just starting and you are learning about private lending, I would say the best and the safest way would be through mortgage brokers, because then you have the opportunity to learn how it's done and experience it, right? And you have the support of the mortgage broker who will help you, who will basically show you how to vet, borrowers, how to vet deals. And through these people, you will learn how to do it. Then I would say when you start becoming more comfortable and, and you feel more familiar with the process, then you can start branching out. And I would say to start working with individuals who have smaller projects, because that also minimizes your risk.
Right.
Because you need to understand that with private lending, you can do a mortgage, you can do secured and unsecured. So you need to know where you stand within that project. Because if there isn't just you who is lending money, and there is, let's say, 10 people, you don't know where you stand in line. So if you're working with a really big project with a corporation, when they have $1 million projects, you have no idea on where you stand.
Right.
So, in that case, I would say if you're starting out, you might want to kind of, taste the waters and say, okay, I'm going to start smaller. I'm going to, deal with individuals or small corporations, right? And then you can, invest more, as more companies, for example, when it comes to land development, it's a great way to make money. However, if it's not a solid company, if they don't really know what they're doing, you can lose money really quickly. And it's not the first time that has happened. So, and it's all, to me, it's all about taking those baby steps and learning the process. And as you feel more and more comfortable, you can, expand in new adventures, and you can expand the risk. You can, But you have to also, it's also in your mindset. It's how you feel inside.
Yeah.
Because if you're going to stay up all night thinking that you made the wrong investment, that you feel like stressed about it, then you might as well not do it, because you're just ruining your life instead of feeling good about it, right?
Yeah, for sure. And I think that's just like for any investment strategy. So,
Yeah,
Barbara, I hope that answers your question. But at the end of the day, you sometimes have to take those small baby steps first to get more comfortable. And that
yeah,
would be even just buying your first single family home, even your first multifamily. You're just like, you know what? I don't want to jump all in at this point in time. I'll take something a little bit, maybe less return, but I just want to learn the system a little bit more. And
yeah,
everybody's here right now to learn. Right. And that's the key is education is extremely important in any facet when it comes to investing at all. And taking that little bit of time to educate yourself. And I thank you guys all for being part of this today. But that's a big piece. And then once you start to get more comfortable, as Marinella's reference, then you can start to look at maybe things a little bit more. I shouldn't say risky is not the right word, just more maybe
advanced.
risky, but more strategic. And I think you'll have more visibility to this. And I think we'll talk about this in a second, is about systems. Once you've got your systems really dialed in, then you can feel a lot more comfortable, right?
Yeah.
So,
Yeah, and I would add also, it's very important that you find a good real estate lawyer
mm,
who can help you with with the process, because private lending is huge. And when it comes to agreements, there is always those fine lines that you don't want to miss.
yeah,
So you want
absolutely.
to make sure you find yourself a really good real estate lawyer who knows about investing, who knows about corporations, and who has his experience. And some of these lawyers even do real estate investing themselves. So it's very important that you double check things,
Right.
and you have the professional view on all whatever you're doing. Yeah.
Mhm. Perfect. So let's get to the meat and potatoes. Okay. We're all here to make some decent returns right here, guys. That's all we want to, and that's not all we want to hear, right? But at the end of it is people want to know, it's like, okay, this private lending game, I want to know more about this. And, what type of returns are we talking about? And maybe you can kind of highlight that as, if I'm about to loan $100,000, what are some of the types of returns that we should be seeing, right? And it comes, Barb's asking great questions. So, what kind of returns should you expect? So, the timing is perfect, Barb. Checks in the mail, my dear. So, what are we seeing? And maybe you can give us some suggestions there. So,
It really depends on what type of investments you're doing. So first of all, you want to know whether it's a secured or unsecured investment. And there is a huge difference, because when it comes to secured investing, you're doing basically mortgages.
right,
When it comes to unsecured, then you're doing more like promissory notes and or loan agreements. So that's a huge difference,
right,
because when it comes to mortgages, you do have a security, because if especially if you're on a first position mortgage, you are going to be on title on that property. So if anything goes wrong, you basically own a house. So and so in that case, because the risk is a lot lower than let's say an unsecured investment, then you're looking at between 8 and 10%. And that's also because of the loan to value as well. When it comes to the loan to value, the ratio basically, let's say the loan to value is 65%. Then it means that you have about 35, let's say on $100,000. Let's say the house, it costs about $100,000.
right,
If there is a 65 loan to value, then it means that $35,000 is the equity that it's in that in that house. And
right,
so if you feel like 65% loan to value, it's great on a deal, because there is quite a bit of equity in the investment, so that if you're loaning, let's say $30,000 on it, that you're covered, right?
yeah,
That you have there is enough in there that if the borrower can pay, then yeah, you can basically get the money from the house itself. You can be sold and you get your money back.
Yeah.
When it comes to unsecured, yes, you get a lot higher returns. You're looking at, I've had returns about 18% on a promissory notes. But then you're looking at higher risks there, because
Right.
there are ways for you to protect yourself. However, when it comes to promissory notes, you are not really like, there isn't really much security in there. So it's not that you are on a mortgage. It's just a piece of paper, literally. Promissory
Right.
notes is just an agreement. And
Right.
so if it happens that there is a default of payment and you end up in court, it's on a first come first basis, basically, because
Right.
your name, it's not on a mortgage. Like, there is
Right.
no security there. And so the person that it's on the mortgage is going to have first priority, and then you as a promissory note person who has used a promissory note, it's basically the last person in line.
Right.
And by the time they get to you, there might not be even any money left,
Yeah.
basically.
That
Right?
makes sense. That makes
Yeah.
sense.
And so
So
you want to be really careful when it comes to promissory notes. Yes, the returns, like I said, you're looking at 18% or 15-16%. However, the risk is much higher, right?
right. 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 So I've got here a comment by Donna here as well. So some promissory notes include the option to put a lien on the property if necessary. How difficult would this be to do?
You can do it. You can do it. You can also actually ask, when you have a promissory note, you can ask for a collateral, right? However, again, it comes down to know where you're at, like in where are you in line, how many people there are before you, right? And so again, if there starts a court process, you're still pretty much the last person is going to get the money, because yes, you can put a lien on it. However, I know that the people, like the lenders who are on um, on a mortgage have, if they there are some type of it's through a lawyer there, of course you do all this they have more rights, pretty much, basically, than anybody else who is not on a mortgage. So it becomes tricky in that way. And even if you as a lender who has used a promissory notes, you can claim and place a lien. However, if there is somebody who is on a mortgage, you don't count anymore. If they come still first before you
Right.
do.
Makes total sense. Makes total sense. Hopefully that answered your question, but that was some great insight about promissory notes. So just be aware of that. At the end of the day, there's obviously some risks that kind of come along with that. So just be cautious of it, but that's where you get some of the returns. So Jang's been patiently waiting. Thank you, Jang. So do you prefer first or second position in regards to the mortgage? If it isn't second, what do you keep in mind?
Well, to be on a first position mortgage, it's ideal. However, second position, it's also pretty good. Like I said before, it depends on the loan to value again,
Yeah,
because
that makes
now
sense.
you have two mortgages on it. So, and which means that your loan to value goes down, right? Sorry, goes up. What I'm
Goes up.
saying,
Yep.
because your equity now goes down. There is less equity because now you have two mortgages in on the same house.
Yeah.
So so it really depends. In that case, you can also ask for a collateral. If you are on a second position mortgage, you can also ask for a collateral again, which might be a different property.
Right.
In that case, I will talk to a lawyer, because sometimes, depending, on there are circumstances where you have to make sure that all this. You need to put in place all those clauses in, so that you are covered, right? You're covered, that the lawyer knows exactly where the money can come from and all of that, so that if something happens, you can move on fast and place a lien to the collateral or whatever it needs to happen, right?
Yeah. And I think that's the key is, I think at the end of the day, and correct me if I'm wrong, a contract's a contract is a contract. And it's really what you guys can both agree to that makes fundamental sense. And obviously, when it comes to loan to value, if you're looking at a 65% loan to value in a first position, obviously there's meat on the bone, as I always like to reference. There's meat
Yeah.
on the bone in case things go a little bit array. So
Yeah.
maybe the returns are not as high. You're referencing 8 to 10 or whatever the case may be. Still not bad, especially for any typical investment, right? But once you start to mitigate or once you start to add more risk to it, there can be more reward. But make sure that you've got yourself kind of covered off one way or another, regardless if it's a promissory note or something of that nature to kind of cover those things off. Am I correct in saying that?
Yeah. And when it comes to promissory notes, I would say you can do it. However, I would really establish a good relationship with the person you're loaning your money to, because it is possible. I've done it really successfully with promissory notes, but it's not the first person that comes to me that I'm starting, that I give promissory notes, right? It's somebody who I've established a really long-term relationship with. I know them really well. I know what kinds of projects they're doing. And, I know that I'm going to get my money back. I know where I stand in line so that, if something goes wrong, I know that I can get my money back. So it is possible doing it. However, you need to really be careful how you do it, and you need to protect yourself. You need to protect your investment. And there is ways of doing it. However, you need to know how.
So we talked about this before, guys. Great questions, and I'm going to try to get to them. You guys are killing it out there, so thank you so much, and it's so wonderful to see everybody. But there was something that we talked about before, and I think it relates to a lot of the questions that are here. Is these individuals that are wanting to get into the private lending side, and we talked about setting up the appropriate system, mitigating your risk. And so, if I went to ask you, Marinella, what is your system? What is the process? We've got a bunch of savvy investors here that are wanting to learn. What is a typical Marinella process for approval for you, and what type of systems have you designed for individuals or for yourself?
Yeah. So first of all, I when I look at somebody comes to me, for example, or I inquire about a project. First of all, I like to know who these persons are, right? So at the beginning, I've established a really big network for myself. That was I think it's really important that you do that, and get to know people, get to know who they are, and establish those relationships, and learn about their experiences, learn about what kinds of projects they've done. Once you have done that, then you start looking at because that's sort of it becomes like a borrower screening, right? That's your borrower screening, that you're learning how to know people, to get to know people, right? And so what they've done and what their background is and all of that. And then this is what I do. Then I start asking about the projects, right? What they, or people come to me, right? And so then I start, I've set for myself, like, for example, I look at the loan to value, right? I look of kind of the returns they're giving. I look if the returns are appropriate for the risk that it's for the of the deal. And so if I see that, for example, the returns are not appropriate to the actual risk, then I ask why, right? And a lot of times, maybe sometimes there are mistakes within, or people don't know, right? And so it's good to inquire about that. And then I look at the financials, all the breakdown of the financials. So I need to look at the numbers. Another thing that I look is the market research that they've done, comparables, at the current market value of a property. And I also want to know what they expect. Let's say if they're doing a flip, what are the comparables, what kinds of returns, like what kinds of what they can after repair value, what would that look like afterwards, right? So it can sort of, you need to have an idea what this person, how deep they've gone to really make the deal look, viable, right? So
Yeah.
those are the things that I look at.
Yeah.
And then of course, you want to make sure that if, let's say, they're doing a renovation, do they have the right insurance in place, right? So those are really important aspects, because if they have a residential insurance, they're using the wrong insurance, especially if you're doing a really like a big project where they're tearing down a lot of and bring it down to the studs, right? So
Right.
in that case, you're looking for a different insurance that covers for fires, if the or anything like that. And I think it's called the builder's risk insurance policy. So it's a lot more expensive than a residential
Hmm.
insurance. So if they don't have the right insurance in place, you want to ask why. Some people they do it just because they don't know
Yeah.
and they're not aware, and other ones because they want to cut costs. And so they will tell you something about the borrower, right? If they're doing it because they want to cut costs, then you don't want to work with them because they don't have the right insurance in place. So if the
Right.
whole thing goes down and catch fire, you'll never see your money back because the insurance will not pay for it.
Yeah.
So those are things that I look. And so you need to know all these things. You need to
Yeah.
know what to look for. You need to look for red flags.
Yes.
And those are things that you also learn through experience,
Yeah.
right? Some things are not in books, and some
Yeah.
things are not. So it's it comes with experience, comes by talking to people. So those are kinds of I've created also questions that I ask to borrowers, right? What kinds of questions depending on the deal. If I want to go further, then I ask questions to them,
Hmm.
depending on what I see on the deal,
Hmm.
right?
Yeah.
So, and I want to have clarification. So don't feel afraid to ask questions of any kind
Hmm.
as a lender, because the borrower is literally using your money. So you want to make sure that you feel comfortable investing with them, that you are protected, and that the project itself and the borrower takes the responsibility of using your money. Because at the end of the day, like I said before, they're using your money. They're using your money to get ahead in life. They're using their money to expand their business, right?
Yeah.
So yes, you're making money as well, so it becomes a win-win situation.
Right.
However, is the borrower going to take the responsibility to make sure that the project is a good project, that it's successful? And and of course, problems can happen.
Yeah.
However, if you have established a really good communication and clear, transparent, and the borrower, they come to you and you can solve the problems together.
Yeah.
Because literally it's a collaboration between you and the borrower. And
Yeah.
it's those really strong relationships that will help you to get ahead, both you and the borrower,
Yeah,
right?
agreed. Agreed. And Adele, this is great. She references, and I think she nailed this one on the head. I think you probably agree, Marinella. It's just like private lending is a branch of real estate investing that should be looked in the same way as any other real estate deal. Due diligence is a must. I know for my deals, when I work with my private lenders, and obviously we've built relationships over years, they've now come to a point of trust. But don't fool yourself. They want to know that I know what the hell I'm doing, right? And so what's the plan, and what's the understanding, what's the project, and what's the viability of what I'm saying is going to happen. So to your point is, what are they looking at from comparables? What are they, what's the insurance, what's all the protections, and does this thing look like a viable plan to fund? And so, I think Adele's nailed it. Is just, it should be treated in the same way. And so for us as investors, and for us that are real estate investors, you got to go with that same type of mindset, even more so because you're looking at the deal, somebody else's deal, and you're like, does this make sense to me? Number one. And then to your point is, I think the credibility of the individual, because you're screening this person as well, is, okay, do I really feel confident with this guy lending some money, and does he know what the heck he's doing? Correct?
Yes. Yeah, absolutely. And yes, like Adele was saying, it's due diligence is a must in, whether you're doing, When you are in JVs and you want to do JVs with your multifamily, you always have to do due diligence. And the same with private lending, right? It's a must, because especially I would say with private lending, because now, you are giving your money away to somebody else,
Right.
basically, right?
Yeah.
If you are doing a project and you are buying a house, you're still in charge of it. In private lending, you basically not in charge anymore. You are trusting somebody with your money, right? And so you need to, I believe in trusting. I believe in establishing relationships. However, it's just one single aspect of the whole process.
Yeah.
And which even the best, sometimes things happen, right? Even if you trust somebody real, and it's somebody who is very honest, and but we know that, like, we had COVID, we just going through COVID, things happen and they're out of our hands. And this is something that my lawyer said to me from the very beginning. Yes, I understand you work with people you trust. However, if you do not cover yourself, and if you don't, put things in place that protect you, no matter how much you trust this person, things can happen.
Hmm.
At the end of the day, it's your money, and you need to put things in place where you can get your money back.
Yeah. Awesome. Really good. Great feedback. Great insight. So I got a question here from Julia, and it's nice to see you, Julia. And this was an interesting one, so I thought I'd throw this one out there just to see. But how can you determine if the borrower has not used the same collateral from another private lender? What due diligence can you complete in this case? So, they're coming back. They're coming to the bank of Marinella. They're coming to the bank of Mike Pawnee at exactly the same time, and we're like, yeah, we want to do this. And how? Any suggestions there? And what in
Yeah,
regards to
yeah, you can actually go to a lawyer, and they can actually pull out all kinds of information on title search and all that stuff, all kinds of lien, if there are liens on a property, how clear this property is. And so, yeah, you basically have to pay a lawyer to get a whole bunch of information, to make sure that the collateral has not been used, and or it's has a clear title, because you basically want to have a collateral with a clear title,
yeah,
because you don't want to have, let's say, three mortgages on a, on a collateral. You just want to have, just, let's say, the one mortgage. You also actually even have to be careful if they have a HELOC on that property, on that collateral, because if they start using the HELOC, then again your loan to value start going up. You're
yeah,
creating debt on that
yeah,
property, right?
yeah.
So those are things that you can verify with a lawyer. How, through, that's basically, you have to go through a legal process with that.
Yeah, awesome. Great. And I hope like that's your question answered, Julia, but that was a great question. Great scenario too. I was like, oh, that's an interesting one. So thank you for that. So let's get to, we talked a little bit about interest rates, and I guess let's kind of change things a little bit in regards to I'll pretend I am the real estate expert, which I am, and I always love kind of going in and looking for money. I need money. I always need money. Anybody else need money? I always need money. But truthfully, is when you're dealing with private lending to fund a project, there is obviously interest rates probably higher, and more often higher than what you would get in your conventional bank. But with that being said, there's also a lot of pros when it comes to private lending, because it is not as, what's the right word? Challenging, I guess, in regards to getting it, because it's definitely a lot more focused on the project itself, and the banks can qualify, or versus the banks qualifying you versus the investment in itself. Obviously, there's still credit
Mhm.
checks and things that go along with it as well. But the question I have for you is, in addition to the rates that private lenders will charge, what type of fees are people seeing in regards to this? So maybe we can just talk about, as a real estate expert, people that are looking for money, and I'm coming back to you, Marinella, and saying, okay, listen, I'm looking for some private money. What would be something that you would respond back to in regards to costs and fees, and what should we anticipate before we go to the private lender, right? So,
Yeah, so it really depends what you need to do. If you're doing a project that it's really long, then I would say just don't come to me. Go and
Yeah.
find like a B lender, and
Yep.
they will help you with that, because then you're looking at very different. Like, if you come to me, I'm going to ask you 16% minimum, right? Um, if you go to a B lender, you're looking at different rates. More like maybe a 7 to 8%, 10%. It really depends on the project, right?
Right.
If it's private lending, if you go to a private lender, it's because you're doing for short term. Because when you start paying like rates like between 12 and 14 and 16% and even 18%, those are pretty big returns. So you don't want to do it for like 2 years or 3 years. It's just gonna put you in a hole. So you're looking at, I've done, let's say, bridge loans, which are really short, 3 to 4 months, and I get paid between 18 and 20%, sometimes even 22%. But those are like 3 months. That's
Yeah.
it, right?
Yeah.
So those are really short term.
Hmm.
And so and because they need that money for a really short period of time, and then they do their institutional financing. They go to the bank and they and get really good rates for that, right? And they get it done.
Yeah.
But then so that's why you want to use private lending or a private lender for very short periods. It's a very and I love actually that aspect, because then I can recycle my money
Hmm.
over and over again.
Yep.
And so if you're somebody who like to be on a long term type of investment, you can do like for example, there are like I said, the land developments are long term, right? So where you can park your money there and you see them for 5 7 years, right? It really depends on the, but and you get also really good returns there. You can look at 18 to 20%. However,
Mm.
you need to know the company and make sure that they're solid companies, because with land development the risks are also really high as well,
Yeah.
right? That's
Yeah.
why you receive those type of returns.
Yeah, and that might just jump into your question there, Jang. So I hope it does. But what do you prefer as a private lender? Do you like buildings better, or do you like private land, or what do you normally suggest in this scenario here?
Sorry, I didn't get
Oh,
it.
so when you lend, do you lend against buildings only, or against land, or against vacant land as well? What's your preference between the two?
I do a little bit of both. Like I do you know do land development. However, I don't put too much money in land development
Yeah,
myself.
right.
I do it just, I have only one, to be honest with you, in land development. And that's because it gives me diversification. I just use it for diversification. I love more like cash returns,
Hmm.
basically, like monthly cash flow. I love upfront fees. I love those kinds of things. So you're looking more at flips and burrs, those type of
Gotcha.
investments. I love those
Yeah.
because they give me that you know um, the cash flow, and so I collect the cash flow, and because I don't need the cash flow for myself, because I have a full-time job, I reinvest the cash flow, and then it helps me grow my money really quickly.
Yeah, for sure. And like kind of on the flip side too, and like even myself, when I use a private lend, it's exactly for what you just said. It's just like, I'm not interested in paying 14, 16, 18% for 4 years. It shouldn't be a financing strategy long term. So for those that are considering this as a strategy, think about it for projects that, for a year, 2 year, because you know what, Marinella, if I went to approach you to something, hey, I've got this deal for 5 years. That's probably almost a question mark right off the bat, right? It's a big flag. She's like, but who wants to spend that kind of money for like that? The end result is going to be not so great, right? It doesn't really
Mhm.
make a lot of sense, correct?
Yeah. Yeah, no, for sure. And that's why I'm saying private lending or private lenders like me, you are looking at, more like for short term. And,
Yeah.
and sometimes, let's say you want to do a rent to own, right?
Yeah.
That's perfect. You can have a private lender who can help you, if you don't qualify for a mortgage. And that's a 3 years, but then it's a mortgage, right? It becomes a mortgage where you you get about 8 to 10%, right?
Yeah.
So
Yeah.
that's different thing. That's like a secured private lend. Um, However, when you get again, like, to higher returns, you don't want to do it for too long. Like,
Right.
it's like I said, it's short term, 1 year max, 6 months to 1 year max. Sometimes, let's say you can have a 12% with the, let's say, lender fee of 2% or
Yeah.
1% or 3%. It really depends, right?
Yeah.
And you have to, those rates, it really depends on the risk of the investment.
Yeah.
And that's why you
Exactly.
need to look at the market research that it's done. You need to look at the project itself. Let's say it's a project where, let's say it's a piece of land that there is a house in there, and it's a tear down, right? And they already have a 90% loan to value there. As soon as you tear down the house, your loan to value goes up again, because now the house does not have any value anymore. So it's
Hmm.
just land, right?
Yeah. Yeah.
And so, you got to look at those things. Is the project going to be devaluated before it's going to be increase the value? Because by tearing down the house, they are devaluating that property, right?
Right.
But then they're going to build on it. I guess they will bought the land to build on it, so they will add value to it because they will build. But what if what if they run into problems? And let's say they had to do like change the rezoning and all of that, and they
Hmm.
get stuck there. Then you get your money stuck because they might be there for like a year or two just to rezone the
Right.
parcel of land.
Yeah.
So you want to make sure when you look at projects, do they have the permits? Have they done the rezoning already? Because when you do rezoning, it takes time. And
Yeah.
what kinds of which municipality they're dealing with. Some of them are really slow, they take their time, and who knows how long it takes, right?
Yeah.
And some of them are very proactive and they're fast. So there is a lot of aspect that you need to look at when you're looking at a project, so
Yeah.
that your money don't get stuck, right?
Yeah. Yeah. Makes sense. So a couple questions that have popped up here. Actually, some really great questions. I just don't get to all of them, but I'm going to start off with this one here because it's kind of leading into this. So, when it comes to lending, and thanks again, Jang, you've been very active today. Commercial, residential, preference between the two. And I guess commercial being more commercial, maybe multifamily, or residential. What if I gave you a choice? Which one would you prefer, or does it really matter?
To me, it doesn't really matter. I look at the project itself, whether it's commercial or residential.
Yeah.
When it comes to commercial, you're looking at bigger projects at this point.
Yeah.
When it comes to residential, it's smaller project, right?
Hmm.
So it really depends on how comfortable you are, and
Right.
with your experience, and how far you want to go. The risks, again, you got to look at the risks. I can't say enough. You need to look at
Yeah.
the risk
Yeah.
and
I agree.
how
Yeah.
comfortable you feel with that risk. Like, you need to really assess your own risk tolerance at the very beginning of your private lending career.
Yeah.
You need to look at it as a business, really.
Absolutely.
So, as a private lender, you become a business owner of your own
Hmm.
money, basically.
Hmm. Yeah. For
And
sure.
you need to manage your money. You need to know how to, you need to learn risk management of your own money. So it's really important that you learn those skills, that you
Yeah.
develop. If you don't have them, you need to develop them.
Hmm.
And if you want to be a really good private lender, like, anybody can do a little bit of private lending here and there. However, if you want to take it to the next level, like I did, and do it professionally, and really do it consistently and make really good returns, you need to learn how to do it properly, and you need to educate yourself before you even get into it.
I agree. I agree. 100% with you. 100%. Good. Great. Great stuff. So here comes the question. So here we got real estate experts. I need some private lenders. I need some money. And then I've got private lenders. I need to find some deals. How do we find each other? What's the process? How do these individuals connect, engage, and work together? What's your thoughts in regards to finding each other, from a real estate expert perspective and vice versa, the other way around?
Yeah. So what I did is basically I network a lot. Like I talk to a lot of people. I invest my time into learning about others, and also I know about marketing, so I promote myself in a very natural way. But I've learned how to promote myself, and I've established a reputation for myself. People come to me now, and I have deals that come right into my inbox. And that's because I created not only a network, but I know how to promote myself. So those are the things that you need to learn how to do. So, like I said, you have to treat it as a business. So you need to learn about marketing as well, because you are basically promoting yourself. And not only that, but you need to manifest your criteria,
Mhm.
your lending criteria to others in a very natural way, so that people know exactly what you're looking for and what kinds of deal you want to be part of, so that they can come to you, right? And so you got to talk to a lot of people. You got to network. A network is your net worth, right? So
Yes.
you got to talk to a lot of people and establish that network for yourself.
Hmm.
You can do it through social media now that we know that restrictions are now being relaxed, so we can start meeting people, have coffee, go for lunch. I grew up in a household, Italian household, where my parents were business owners. There were real estate investors. We had people at lunchtime. Lunchtime is our main meal, right? And I grew up with having guests sitting at the lunch table on a regular basis, talking about business, like
Hmm.
talking about investing, talking about. So it's like it's basically create those opportunities at a lunch table, right? You know what I
Yeah,
mean? Coffee, have lunch, Zoom. You have to promote yourself. Like you have to really take the time to invest the time. To me, it's like an investment, right?
totally.
To get to know people and establish it, like we said before, those relationships. Relationships. I have great borrowers that come to me all the time, because now they finish one project, and they're like, Marinella, what do you think? Do you think you want to investing in this project again? So, and then in that point I'm like, yeah, sure, use the money. I don't even get my money back anymore, because now it saves me time to get money from the bank and transfer all these funds, and I don't even lose one day of interest, because now we just renew we have a new contract, and I know that they're doing very successful projects. So to me, it just saves me time. It saves me, I make money. I don't lose any interest on, like I said, not even one day, because now I finish, let's say, today, and tomorrow the other contract starts,
Yeah.
and there is no transfers of money. They continue growing. I continue get my returns, and my money keeps, working for me, right?
Hmm.
So those are, great relationships. If you find those borrowers that you trust,
Yeah.
and they have constantly new projects, your life is easy. Honestly,
Yeah.
it
I agree.
becomes easy. It's at the
Yeah.
beginning where you have to find those people, and like I said, put yourself out there, talk to everybody, get to
Yeah.
know people, because then you can find people through other people. They can maybe introduce you. I introduce people all the time
Hmm.
to mortgage brokers, to companies, to other investors. I connect people all the time,
Yeah.
right? So because I like to help others. If you don't know where to start, okay, I'll give you a hand. I'll help you there, right? Because I know now, like a lot of people, right?
Hmm.
But you also have to help yourself. Like I can introduce you to maybe a couple of people. However,
Yeah.
now it's your turn to put yourself out there, um, and start reaching out to people. Yeah.
Yeah. Agreed. I think just like in any business is you need to let people know what you're doing. Period. And
Yes.
the more you
Yes.
communicate, the more you share out there, the more you throw it out in the world, it's amazing what comes back. But if you're just silent and you don't say anything, then you will never be able to get the results that you're trying to accomplish. And you'll never be able to grow your business. By communicating exactly like you've said, Adele, just reach out and let people know what you're doing, what you're involved with. And it's amazing the type of business that can come in. So great advice. Love it. Okay.
Mm-hmm.
So we're kind of coming up against the clock, man. I know we can be here for like another hour, and there's such amazing questions that I wish I can get to all of them, guys. And it's wonderful, but maybe I can kind of ask one final question. And maybe just to begin with, I've actually maybe got two. Maybe I'll start off with this one here. I'll start with this one, and then and then I'll kind of wrap things up. So maybe for those that are kind of getting into the private lending side, and this is a real big question that it's probably really important. I know we touched a little bit on this at the very beginning. Take the time to, they want to go in. What are some tips that you would suggest in regards to protecting themselves in this venture? So maybe you can offer a few suggestions. And again, it goes right back to it. I'm just getting started. What are things that they can do to protect themselves as a beginner getting into this?
Yeah. So the first thing I think it's to find a lawyer. Find a lawyer, and because then the lawyer can help you to vet also like the borrower and the deal, right? And then second is educate yourself.
Yeah.
Learn how to do it. Also find a good mortgage broker that can help you invest, right? So lawyer, mortgage broker, and then educate yourself. Those are the three basic things that you need to do at the beginning if you're not comfortable. And also, understand if this is the right strategy for you. If, understand your risk tolerance as well.
Yeah.
I would say introspect and understand if you're comfortable giving your money to somebody else.
Yeah.
Right. And so I would say those are sort of the basic things that I would recommend. And learn how to do the due diligence, and honestly take your time. Like, don't rush into it, because you want to do it right, because you can lose your money really fast.
Perfect. Awesome. And then I'm going to flip the switch a little bit and just say, as a real estate investor, what should I prepare for, or what should I organize myself to get my financing approved by somebody like yourself, Marinella? Like, so what would be some of those things to make my application or make my process appealing to a private lender?
Yeah. So I would say present me a solid investment where you show me that you have done the research, that you have, that you know the numbers really well inside out, that you show me that you have, there is no red flags. That you also show me that you're trustworthy, right? That you're somebody who is, not afraid of answering questions. Because I've had people who refuse to answer questions, or they feel like, they're sort of, I would say, afraid of answering questions. You know what I mean? That to me is a red flag.
Yeah.
And also, it's make sure that, as a borrower, you show me that you feel that responsibility of managing my money, right? And that you have, the capacity to manage those investments, right? And you've learned the process, and that you've learned how to work the numbers, like I said before, and make it a viable, like a good investment.
Yeah. Love it. And it goes right back to, guys, for those that are looking for private money, you just need to know what you're doing in regards to your acquisition to make people feel comfortable in investing with you. Because like we said before, it is really referenced on the deal itself, and they want to make sure that there's some viability behind it. So Marinella, this was awesome. Like I said, I wish I could get to everybody's questions. Great insight. And I think at the end of the day, please keep posting them. we'll try to respond accordingly on the Savvy Investor YouTube channel as well. So we'll just make sure we get those questions answered. Maybe to kind of wrap up, and I know you run a program on this, just in case people are interested in wanting to know more about it, Marinella. Maybe you can just touch on what is it that you teach and what do you do, if you don't mind.
Yeah, no, I have coming up on the first week of March, the 4 to 6. It's just 3 days course, private lending course, where people will learn all about private lending, as I said, from due diligence process, how to create systems, and I will teach also the SMART strategy, which I developed for myself, and also some really powerful maximizing return strategies. And it's through those systems and strategies that I've actually been able to, take private lending to the next level for myself and really do really well. So I will teach all that in the course, and and I want to empower people through my course. I want people to feel really comfortable about private lending, and I want them to be able to take action, and being able to start investing and be successful, right? And they will not be left alone. Like after the course, I will have also quarterly meetings where we can all as community grow together, answer questions, learn from each other, and and there will be opportunities within the course itself where I will present some of my network companies, and people will have the opportunity to invest right there.
Awesome. Love it. You know what I'll do for those that are interested in wanting to learn more about Marinella and her private lending program? I'll put a link in the description to her page. It will give her all sorts of information for those that are interested in wanting to learn more. So Marinella, I can't thank you enough for all your information. I hope you guys all found some value in this. Again, give us some thumbs up if you guys have been really happy and very informative of this training session. It's been wonderful having you here, and I can't thank you enough for being part of it.
Thank you for having me. This has been amazing. I love doing this, and I love helping people. So feel free to reach out to me. My email, you can connect with me at the smart@foryouttosucceed.com. And it's I don't know can I put it out here? I guess I could.
I'm not sure if you could pop it up here, but you could just put it in the comments. But what you could also do is Marinella is also a Savvy Investor as well, so you can always message her on Facebook as well. And for those that are not part of Facebook on our Savvy Investor community, please jump on and go and visit us there. So awesome.
Yeah.
So as we kind of conclude, again, Marinella, thank you so very much. And I hope you guys all enjoyed the training sessions. As we kind of conclude, please do me a small little favor, hit that subscribe button if you haven't already, to help us grow our Savvy Investor channel. And we will keep you informed as we upload new videos. We've got lots planned for this coming year. And again, regardless if you're watching this live or through the recording, please post your questions, comments below for me, and I'll make sure that we respond accordingly. So with that, we're going to conclude our session tonight, and we hope to see you at our next YouTube Live very soon.